This is not the turn that maybe markets had secretly hoped for. Look, the economy remains weak. The import numbers clearly show that. And even on the export side, we would fade that strength a little bit. Yes, some of the Asian numbers have looked better on the trade front, Korea as well, Taiwan, for example. But this is a lot of inventory adjustment coming through the global system that's not going to be follow through on the export side in the next few months. And of course, on the domestic side, with imports contracting again, that just highlights that there's still a steep hill to climb when it comes to generating that accelerating growth out of mainland China.
Yeah, Fred, look, I mean, can we look at this data juxtaposed to a lovely piece you put out 6 days ago, and it was your Asia chart of the week, and you were talking about green shoots in trade, but asking the absolute spot-on question as ever: will they grow into sturdy trees? And you still have the same questions, don't you?
Still have the same question. This is not something that really suggests there's going to be accelerating exports. Yes, they're positive, but remember, there's base effects that kind of pushed up the numbers. We know there's an inventory adjustment going on in the world economy, particularly from U.S. importers. But all the forward-looking indicators, new orders for electronics, for example, new export orders, they all suggest that there is not a pickup in end demand. And in fact, it's more likely the U.S. economy will slow into next year. European demand looks still wobbly, and so does the rest of EM. So where's that demand going to come from for a sustained export cycle? And that's really a bit of a headache then for Asian policymakers, including in mainland China, because they need to rely on domestic demand to really get the engine going again. And for that, we haven't seen evidence of that happening just yet.
Right, this is probably the most downbeat I've heard you for a while, and concerned about the broader economy. And then we'll add in as well the fact that crude oil, which I think is a brilliant barometer of Chinese demand, not seeing the demand from the teapot refineries as well, down 9.2% from the latest figures, one of the first year-on-year declines we've seen for a very long time as well. You mentioned policymakers, and this is where I'm really fascinated as well, Fred. Do we think that China does have the ability to do some really heavy lifting when it comes to policy, or actually are they constrained by the fact that debts are pretty large across the board?
So actually, we have no doubt that there's still a very powerful levers they can pull. Of course, there's a lot of debt, but there's no imminent constraint to raise it. The question is, do they have the willingness to do it at this point? Because the numbers aren't catastrophic in China. There's still growth coming through. Remember, the economy is ticking along at around 4.5% or so. At least according to the headline numbers. It is not as if we see mass unemployment. It's not as if we don't see construction in infrastructure, for example. We do see that. So in some sense, the numbers aren't bad enough to really trigger a big stimulus. And that's, I think, a little bit of a disappointment for the market, because we're still hoping for the bazooka. But guess what? Growth is just not so bad that you really need to bring out those big stimulus packages at the moment. So we just muddling through here for a while, and it's hard to see that pattern change over the next few months.